We have the January 2017 core sector number coming in now. That's coming at 3.4%. Latha joins us from the Mumbai studio. Latha, what are you making of the number, and what are the highlights that you're picking up?
Well, the highlight is that there is a very poor performance in the cement sector. This is not unexpected. Cement move, depending so much on construction, was impacted by demonetization. You saw a contraction of 8% in December. Now you're seeing a contraction of 13% in cement. So cement is really the most telling example of how the impact of demonetization is felt on the economy. Unlike cement, steel is actually showing fairly robust growth. It showed a robust growth in December as well, and now in January again an 11.4% growth in steel output year on year. We must remember that year ago it was a very difficult scenario of Chinese steel prices crashing, global steel prices crashing, and therefore Indian steel not doing well. So this is also a low base impact that is making the steel output look very good, and steel has been doing extremely well practically throughout, almost since June, July. We have been seeing an outstanding steel output. This has been the past year, 2016 has been a good year for metals. It was in January that you had these recessionary fears, January of 2016. Almost from March, you started seeing the pickup. Cement, the impact is of demonetization. But overall, you can quite clearly see that January has not performed to form. Till December, you thought that the demonetization impact on core sector is not very high, but now it is quite clearly beginning to tell. Electricity as well, only a 4.8% growth clearly indicates that consumption is not very robust. Otherwise, more power would have been lifted. The rest of it is true to form. Fertilizers has been showing a bit of sluggishness. And besides that, not much to speak about coal. It's been a desultory performance. That's largely the core sector performance. Okay, we have Rupa, Rege, the Chief Economist from L&T Financial Services joining us. Rupa, first thoughts from the numbers in the core sector?
Tell me the numbers, please.
Well, it's 3.4% overall, and cement minus 13.3, but compensated by steel, which is plus 11.4. The rest of it is rather mundane. Coal 4.8%, electricity 4.8%, crude oil 1%, and of course natural gas, because of the low base, is up 12%.
Yeah, but still I would say that core sector numbers are holding firm, and that is consistent with, corporate earning results or IIP basic goods. And you see, heartening thing is that steel has maintained its performance consistently thanks to this minimum import price and the safeguard provided by the government to domestic manufacturers. So it's a performance consistent with underlying macro currents.
Okay, we'll leave it at that. Rupa, thank you very much for joining us with that quick take on the numbers that are just hitting the screen. Core sector finally showing some signs of fatigue after holding up in December. Back to you, Arib.